Hi everyone, it's Alex Sparks here from Sparks Finance and I'm your local mortgage broker in Bathurst. Today's video is how to consolidate debt the right way. Now this conversation has come up quite a bit recently with the rising cost of interest rates, but also to the rising cost of general living. A lot of people are looking at different ways to try to reduce the amount of expenses they have per month. One option people look at is to consolidate their debt into their home loan. A lot of people do this for just for convenience. So they're taking, 3 or 4 repayments potentially and just putting them into one. Or they want to say, look, I want to try to save some money here. Now, when people look at that option of consolidating debt into their home loan, it's so important to make sure that it's done correctly so it's not costing you a lot of money in the long run. We're going to go through some examples now just to show the difference and the options that you would have and how much different it actually is if you don't do it correctly and how much extra interest you would pay. So under this example, let's say someone had an amount of consumer debt of $50,000. So they want to consolidate $50,000 worth of consumer debt, which could be made up of a car loan, a personal loan, a credit card, zip pays, afterpays, whatever that might be. So let's just say the average interest rate on that is say 10%. Over a 5-year loan term, their normal repayments may be say $1,062 per month in this instance. Now, over that 5 years, that $50,000 would have an interest bill of $13,741 over that 5 years. Now, what a lot of people mistakenly do is just go, okay, great, I'm just going to consolidate that in my home loan. I'm going to refinance, consolidate that in, and they put that $50,000 into a 30-year loan term. Now, what that essentially does is when they're not making additional repayments on that loan, by stretching that $50,000 over 30 years at say a 5% home loan, that's going to equate to $46,628 worth of interest. So that is $32,000 more expensive than if you had just left it the way it was. The correct way to consolidate debt is by taking that loan amount of say consolidation amount of $50,000 at 10% interest and moving it to a lower interest rate of say 5% on your home loan, but still paying it off within that 5-year loan term. Now what that will do is still reduce your repayments from $1,062 to $943, but it's only going to cost you $6,614 in interest, not $13,000 or $46,000. So by doing that, compared to the current structure that it would be in, okay, you're going to save a considerable amount of money. You're going to save $7,127 worth of interest by leaving them as their current format. But also too, you're going to save $40,000 by not stretching that over a 30-year loan term. The key here is to understand the costs associated with that debt over a long term. And really important, if you're going to consolidate, to make those additional repayments on your home loan to ensure you don't rack up that massive interest over the life of the loan, which is really financial suicide because you're just paying so much more. You're paying so much more over the life of that loan. Some people may choose to go, look, I understand that, but we're really tight. We're dropping to one income because we're going to have a new child come along. And that's completely fine. That strategy is absolutely fine. Going, I understand it's going to cost me more, but for my family, it's more important for us to save that $700 per month because we want to have that little bit of room to move. That's absolutely not a problem at all, but understanding that and having a strategy to go, we're going to do this for the next, say, 1 or 2 years, and then once we go back to full-time work with a second income, we can then make those additional repayments, and we'll work towards doing that. But by understanding a strategy and working with it with a financial expert such as myself, we can guide you through that and make sure that we're achieving, we're locking in that strategy and making sure that you've got someone to guide you through that process. Because we want to make sure that the cost of consolidating that debt is going to be beneficial for you, for your needs and goals. Look guys, that just gives you a little bit of an understanding around consolidating debt the right way, but the main thing is here to make sure that it aligns with your needs and goals and what your strategy is. So I really recommend, if you're looking at refinancing and consolidating that debt, please come and have a chat to me. We can sit down, work out a plan, understand the actual numbers, and make sure that you're committed to that process process and you understand all the pros and cons associated, and we can hopefully, consolidate that debt, save you some money, and obviously help with whatever your needs and goals are. Thank you very much for your time, everyone. Have a good day.